about this. There are loans that are made from one part of the government to another. There are reciprocal, non-reciprocal. I won't go into this. But these are the types of interfund activity that can occur between two different funds. The magic rule that you should always remember is that any transaction that occurs within the 5 governmental funds, general fund, special revenue fund, debt service fund, capital projects fund, permanent fund, any transaction that occurs within the 5 on the government operating statements, you have to eliminate those transactions. You don't want to be double counting. You don't want to be double counting transactions. It's like transactions occurring within the same family. However, if the transaction occurs between the governmental and the business type or fiduciary, they are recognized. But within the, you still book it, but you don't want to be blowing up your balance sheet just because of internal transactions between governmental funds. So that's the reason. And we'll look at that more. You can read about this more, but let's just talk a little bit about permanent fund. I see one of you picked Alaska as your CAFR exercise, and I'm glad you found the Alaska Permanent Fund. Again, intended for a public purpose. That's the word, public purpose, not private purpose, public purpose. Public purpose meaning benefits everyone, not a group, but everyone. Second, only the principal amount, only the earnings can be spent. Principal amount has to be kept intact. And we'll look at variations as we go through the course. These are the exchange transaction, and unfortunately you would have to really read this and kind of understand and retain this, because we'll take a look at the different types of transactions that occur both in exchange and non-exchange. I told you about exchange. Exchange-like transactions are those exchange transaction, pure exchange transaction, and exchange-like transactions. Not equal value. Pure exchange is equal value. Exchange-like is not equal value. Some value, but not equal. These are non-exchange transactions, and I think I talked to you about this is where specifically you have a grant. Revenue recognition depends. I remember I talked to you. The time has to be present. The eligibility requirements. Okay. Purpose restriction. You remember this from my grants. Non-exchange. When the town gets a grant from the federal government, does the town give anything back to the federal government? No. They just spend it, right? When money is received for Hurricane Sandy by New Jersey towns, are they giving anything back? No. They're just fixing things. That falls right here. And that's why we need to know how to recognize this, those types of transactions. I talked to you about it. Okay, we're almost done. These are the